If you've ever thought about starting your own business, whether it's a full-time business, a side hustle, whatever it may be, this episode's for you. Welcome to episode 11 of the Emerging Wealth Podcast, a podcast dedicated to giving you outside the box ideas for tax and financial education. I'm your host, John Boyd, certified financial planner and founder and lead wealth advisor at Modern Wealth. That's Modern spelt with no vowels, wealth. We're a fiduciary fee-only financial planning firm. We do it all from taxes, investment management, even travel planning. And I'm so glad you're here today because we have a good one for you. So the inspiration for this episode, as some of you may know, I actually partner with the Arizona Department of Corrections to provide financial literacy services to incarcerated individuals. And because a lot of these incarcerated individuals have felonies, and once they are released, are going to have a difficult time getting a job. Many of them are very intrigued with the idea of starting their own business. And so my job as a financial planner that partners with them is to give them a primer on the basics of entrepreneurship, everything from taxes, business structures, etc. And so in setting up a lesson for them, I thought to myself, you know what, this would actually be a good podcast topic. So here we are, starting a business 101. This should hopefully clear up misconceptions and hopefully give you some of the tools and knowledge needed to go down the path of entrepreneurship. Before we dig in today, if you are looking for in-depth tax planning and you need help, reach out to us, www.modernwealth.com. That's modern spelled with no vowels, wealth.com. We are still onboarding new clients and we'd love to help out you and your family. So don't be shy. Reach out. We'd love to help you out. So when it comes to entrepreneurship, there's a lot of gurus out there that will talk about, LLCs and setting up your own corporation and all this fancy mumbo jumbo, right? But let's keep it very basic and let's use the classic example of the kid that opens up a lemonade stand, right? So let's say you go open up a lemonade stand and you start selling lemonade today. You are immediately classified as a sole proprietor. You have a sole proprietorship on your hands. Congratulations. You've started a business. You are now an entrepreneur. And with that comes benefits. So first and foremost, if you set up the lemonade stand in this example, number one, it's easy to set up. It's very easy to be your own sole proprietor, right? Especially now more than ever, where you can easily go online and start a side hustle. It is easier than it ever was in history to be a sole proprietor. You also have 100% control of your business and there's minimal regulations involved. What's also incredibly important to note, and if there's anything that you get out of today's episode, let it be this. When you are a sole proprietor, right? You just up out of nowhere today decided to start your own business. You get all the same tax benefits as someone who went and spent a bunch of money to be a solo member LLC. Let me make that very, very clear. You get the same tax benefits as someone who is a solo member LLC. And the reason why I want to make that crystal clear is that a lot of folks tend to think that you need to have an LLC to get tax benefits associated with your business. And that's false. As you are going to learn later, an LLC is an asset protection move. Now, does it open up the door to more advanced tax elections? Potentially. But it is by default, the taxation is exactly the same as a sole proprietor, right? Even on Schedule C, this is the tax form that you would utilize as a solopreneur, right? On that statement, it specifically says sole proprietorship. right? So you get to deduct all the expenses associated with your business from your income, right? You get all the same beautiful tax benefits. Okay. So it is really that easy to be an entrepreneur. Now, with all that being said, can you just simply claim anything that you are doing is a business? No, right? I mean, if you play, video games and that's a hobby of yours, and you want to just claim for tax purposes that your video game expenses, like buying games and controllers or whatever, are business expenses, that's likely not going to fly in the eyes of the IRS. However, if you actually have a legitimate business and you are trying to make income and there's proof that you can make money doing this, then you could potentially deduct those expenses. So again, it is very, very easy to be an entrepreneur and set up a sole proprietorship. It's very easy to set up a sole proprietorship, but also keep in mind there are drawbacks to it. And the single biggest drawback with the sole proprietorship is that you have unlimited personal liability, right? That's where the LLC comes into play, which we'll talk about in just a moment. But in the lemonade stand example that we've been using, if someone were to get sick from drinking your lemonade and sue you, well, there's no division of your personal assets from your business assets, right? Everything is commingled. It's the same. And so now your personal assets are at stake in the event of a lawsuit against your little sole proprietorship that you set up, right? So that in and of itself is a huge risk and turns a lot of people off from simply setting up a sole proprietorship. It's also harder to raise capital, right? If you are looking to raise capital, get business loans, etc., simply operating as a sole proprietorship can make that a little bit more difficult. And the last note is that, as you'll learn a little bit late in this lesson, is that there are no gateways as a sole proprietor to advanced tax elections. Okay. Now, let me make that clear. Advanced tax elections. So before we move on to talk about LLCs, if you are thinking about starting a company and you want to go out and do it, it really is that easy. You get all the same tax benefits as someone who is a single member LLC. It is truly that simple. And depending on the type of business that you have, you may not need to set up an LLC. So again, it truly is that simple to start a business in the United States. It's one reason why so many people view the United States as the land of opportunity and very business friendly, because again, it is truly that easy. And we have a tax code that makes it easy and rewards entrepreneurship. So let's talk about the LLC now. Okay. So we mentioned how you have unlimited liability as a sole proprietorship. Enter the LLC. Again, contrary to popular belief, there was a story, and you can Google this. I don't want to name the company, but there was a CEO of a company that spoke at a college commencement ceremony. And as a gift to that graduating class, this individual bought everyone an LLC for their graduation. And the logic behind that was everybody deserves to pursue, have the opportunity to pursue entrepreneurship. Therefore, I'm buying everyone LLCs, which is absolutely absurd. You don't need to have an LLC to pursue entrepreneurship. However, an LLC does provide asset protection. So what the LLC does is that it helps divide your personal assets from your business assets. That is the primary purpose of setting up an LLC, right? When you hear about people setting up LLCs for rental properties and things of that nature, right? It's to divide these, quote, business assets from your personal assets in the event that there is lawsuit. You give yourself pretty significant protection. That is the primary purpose of it. Now, there are additional benefits to it besides just asset protection. There is pretty flexible management, right? It's very easy to have a multi-member LLC. And then initially, again, your tax benefits are exactly the same as someone who is a sole proprietorship. But some of the disadvantages with an LLC is that they can be more complex, and depending on the state that you are in, it can be much more expensive to set up. And your annual registration costs can be expensive as well. So for example, a state like California, it's not cheap to set up an LLC. Just to casually up in one day start an LLC, it takes money. So in a state like California, you really need to decide, are you in a business that requires that type of asset protection? Or are you in a business that could get away with operating as a sole proprietorship? Again, many businesses obviously would benefit from the LLC, but it's not mandatory. And that's the point that I'm trying to get across here. Finally, although there is significant asset protection, you can, quote, pierce the corporate veil. Right? I mean, if you do something so heinous and so outrageous, the LLC is not a silver bullet to getting away with any personal liability, right? It's completely possible that you could still face personal liability in a lawsuit, even with an LLC. Gives you a lot of protection, but it's still possible. But aside from the, significant asset protection, the ability to make advanced tax elections is perhaps one of the bigger LLC advantages, which we'll talk about in a moment. So let's just recap so far. So as you are on this entrepreneurial journey, day one, you are a sole proprietor. Whether you decide to stay a sole proprietor is going to depend on a variety of different factors, including the type of business that you have and the requirement to have asset protection, the ability to raise capital, right? There are numerous factors that will determine whether it makes sense to stay a sole proprietor or pursue setting up a solo member LLC. But let's say that you take that leap and you set up an LLC for yourself, for your business. You're an entrepreneur. Day one, you were a sole proprietor. You went ahead, set up an LLC. You now are a solo member LLC running your business. Life is good. Let's fast forward in time now, maybe a year or two later. Your business now is making real money, right? All of a sudden, your business that wasn't making anything is now providing a decent amount of income to your household. At this point, what do you do? This is where the advanced tax elections would come in. We're not going to go over all of them, but the most common one that you would make on this entrepreneurial journey, generally speaking, is an S-Corp election. Now, what is an S-Corp? So, contrary to popular belief, an S-Corp isn't you establishing a separate corporation. As much as it may sound like that, it is not. An S-Corporation or an S-Corp is merely just a tax election. So you still are going to have the same setup, right? You have your personal assets on one side, and then you have your business under your LLC umbrella on the other side. Nothing changes there. So an S-Corp is merely just a tax election. Now, why the heck would you make this tax election to be an S-Corp? Well, let's look at an example. So let's say that your gross revenue is $100,000. After you factor in your operational costs, marketing expenses, etc., you have $30,000 worth of expenses. So your net income is $70,000. Okay. As a sole proprietor or a solo member LLC, you are going to have to pay federal income tax, obviously. You're going to have to pay state income tax if applicable, and you have to pay self-employment tax. Now, if you've been a W-2 employee, you're probably familiar with this to some degree. When you look at your pay stubs and you see that FICA tax, right? The Medicare and Social Security taxes coming out of your paycheck, right? That's the FICA tax. Now, with the FICA tax, as a W-2 employee, you are being taxed, the employee and your employer is being taxed. You guys split that tax in half. You pay 7.65%. Your employer pays 7.65%. You split the difference, and you see that difference on your pay stub when they withhold taxes. But as a self-employed individual, you not only are the employee, but you're also the employer. You're everything. So you have to pay both sides to that. Sounds a little bit crappy, right? So when you add that up, your self-employment tax is no longer just 7.65%. You have to pay the whole thing. So it's 15.3%. That's your self-employment tax that you have to pay, in addition to your federal income and potentially state income tax. So 15.3% of $70,000 in net income is $10,710 in self-employment tax. That's a lot of money coming out of your pocket just in self-employment tax alone. So what can we do about this? This is where the S-Corp comes into play. If you were to make an S-Corp election, now without making this an entire episode on S-Corp elections and the nuances of it, how this would work is that $70,000 in net income, you would divide that in two ways. You would take some as a salary. So you would pay yourself a salary from that net income. And then the rest would be considered, quote, pass-through income, or pass-through to you on your tax return in the form of a K-1. So let's say that you decided with $70,000 in net income, you decided to take a $30,000 salary and the rest being a $40,000 K-1 or pass-through income. The reason why we would set this up is that you would only pay self-employment tax on that salary, the W-2 portion of the income. So in this case, because we've decided of that $70,000 in net income to take 30 of that and pay ourselves a salary, that's the amount that we would pay our self-employment taxes on. So 15.3% of 30,000 is now $4,590. Compare that to $10,710. That's over $6,000 in tax savings. That's huge. That's significant. That is why, as your income gets higher, as an entrepreneur, you need to potentially keep this in the back of your mind. And the reason why I stress that is that a lot of entrepreneurs, there's that misconception that, well, I've set up an LLC, I've done all I've needed to do from a tax standpoint. After listening to this episode, you know an LLC doesn't give you any tax benefits in and of itself. It does nothing. Unless you are aware of the fact that there are other tax elections out there, there's really nothing that's going to change from a tax standpoint between you and a normal sole proprietor. So keep that in mind, because this happens all the time with entrepreneurs that I work with that are starting to make real money. Income is starting to get up. Their net income is high, and they are completely unaware that they could make an S-Corp election that could potentially save them thousands of dollars. Now, again, with an S-Corp, it's more complex, right? There's additional tax forms that need to be filed, and you'll need to pay for payroll software because you're going to have to technically pay yourself a salary. So there are some additional hoops to go through. But when you weigh the pros and cons, it very likely could make sense to do, especially given the fact that it could save you quite literally thousands of dollars. So just to recap, starting a business 101, the entrepreneurial journey. You start off day one, you're a sole proprietor. Okay, you're a sole proprietor. Can you remain a sole proprietor? Absolutely. You can remain a sole proprietor. Depending on the type of business that you're in, it may not be necessary to set up an LLC, right? So it's absolutely okay in certain circumstances to remain a sole proprietor. But let's say that you need that asset protection. And you go ahead and set up a solo member LLC. Great. That's okay. So now you are a solo member LLC. You have additional asset protection. You've divided your personal assets from your business assets. Life is good. Keep in mind, there are no additional tax benefits initially with this move. Now, fast forward in time a little bit. Now your company, your business is doing well. You're making more money. You're stacking it up. Your net income is higher. Generally speaking, what's the next logical progression in the entrepreneurial journey? Well, that's where your LLC might make an S-Corp election to reduce self-employment taxes and to increase your bottom line. Now, with all that being said, are there more steps that we could talk about? Eventually when you have a massive business, right, it could make sense to set up a C-Corp way down the road, right? Stuff like that. But quite frankly, it's not necessary, in my opinion, to discuss that right now, right? Many people, even with a very, very successful business that maybe generates millions of dollars, may not need to be a C-Corp down the road. The S-Corp could be enough, right? So again, that's a conversation for a different day. This should give you all the tools to understand what it's like to start a business. If you need help doing more advanced tax planning and financial planning around your business, reach out to us. www.modernwealth.com. That's modern spelled with no vowels, wealth.com. We'd love to help you out. I hope you found this informative, and I hope you have a great rest of your day.